Hi, welcome back to the GST certification program of ICAI. I am CMA Bogwali Mallikarjun Gupta, and today I will walk you through over the anti-profiteering provisions in GST. So what is this anti-profiteering? Why are we talking about anti-profiteering? What is the need for having anti-profiteering? All this we will discuss in today's discussion. And if you see the major impact of GST, or one of the important features of GST is input tax credit, and what is the association of input tax credit with anti-profiteering also we will discuss, and then we will discuss about the rules and what is the action plan as a corporate manager or as a cost accountant, as a stakeholder in the organization, what we should do to ensure that we avoid notices from the National Anti-Profiteering Authority. We will discuss on all these points in this session. So, anti-profiteering, is it new for us in India? The answer is no. We had similar provisions in West Bengal way back. So, we had an act in West Bengal known as West Bengal Anti-Profiteering Act, issued in 1958. And what is the main intention of the act? Any dealer who makes profiteering by way of selling the notified goods at a higher price can be punished with rigorous imprisonment up to 2 years of fine or both. So here the act is very clear. If any dealer who makes profit by selling the notified goods at a higher price can be prosecuted and can be penalized with the fine as well as imprisonment. So we Indians are not cannot say that we are new to the anti-profiteering provisions in India. And there is also a provision in the act which says that the buyer also can be prosecuted under the provisions of West Bengal Anti-Profiteering Act 1958. Now, coming back to the GST, what are the major benefits of GST? By now all of us are aware, because we are at the fag end of the session. We are discussing about section 173. So what is GST? What are the benefits of this? We are all aware of it, but just for the purpose of this topic, we'll just have a recapitulation at a very high level. The first point is seamless input tax credit across the supply chain cycle. So here under GST, the major advantage is input tax credit is available across all the stages or across the transactions of the supply chain, right from the manufacturer to the end retailer. Everybody, all stakeholders can take input tax credit, whereas that was not available in the previous regimes. The excise credit was available only in case of a manufacturer only. It was not available to a dealer who is registered under VAT, or a service provider who is not registered under So these are all the complexities we had previously, but now we don't have this with introduction of GST. Then another important thing is all taxes are eligible for input tax credit under GST. Bearing an example for your compensation cess, which can be offset again with your output supply if it has compensation cess. Rest of the things, all your CGST, SGST, IGST, the taxpayer can take input tax credit, whereas this was not available under pre-GST regime. Your CST, input tax credit, is not example, one classic example. Then interutilization is not available, or if it is available also, it is at a very high level. Say for example, I am a registered taxpayer or a dealer under VAT in the previous tax regime. The moment I say I am registered under VAT, it is implied that I am only into the process of selling the goods. So if I am a retailer, I will be registering under VAT for selling of the goods in that particular state. And when I am selling the goods, every good is manufactured. That means central excise is being levied. being a taxpayer or dealer under VAT, which where I am not a manufacturer, I am not eligible to take the input tax credit of central excess taxes which I am paying it on my inputs. Or if I purchase or if I procure any services, on that I am eligible to pay or I am supposed to pay service tax, that is not available under VAT because I am not registered under service tax. In case if I am registered also under service tax, I am providing services and selling goods, then I take registration under service tax as well as for VAT. But the input tax credit of my service tax, I cannot use it to offset the liability of VAT. So this is a major challenge which we had in the erstwhile tax regime. And in certain states, whenever there is movement of goods from one state to another, if it is a finished good, certain portion of VAT input tax credit which has been taken has to be reversed. So that will again add to the cost. The reason in the previous regime it has to be reversed is VAT is an origin based taxation. So if I purchase goods here, I can take input tax credit here only. But if the tax credit is taken here and I am selling the goods outside the state, that means the state is going to lose the revenue where the goods are being enjoyed in the neighboring state. So many of the state governments have come out with the proposition and they have imposed that certain portion of the input tax credit has to be reversed when there is interstate transfer of goods. So all these points which have ensured that the end customer, he is paying higher price because of the taxation impact. All these are the challenges we had in the erstwhile tax regime, but in GST we don't have any such challenges. That means the end price which the customer pays is supposed to come down. Why do we need to have a provision for anti-profiteering specifically in the GST Act? If you go back to the history, or if you go back 10 years back, about 10 years when VAT is implemented in India, that point of time also we have been propagated and we have been told that because of input tax credit availability, the prices are supposed to come down to the end customer. But that has not happened in reality. That has been observed even by CAG also after the rollout of GST. The input tax credit benefit not being passed on to the end consumer by the taxpayer has led to some amount of dissatisfaction in the consumers as well as some impact on the inflation of the country. Apart from that, even across the globe where we had 165 to 167 countries which have rolled out GST or VAT, in those countries also wherever the provision of anti-profiteering is not there, it has been observed that the taxpayers have unduly taken the benefit of the input tax credit, and that has resulted in inflationary pressure in countries where taxation was not at all there. In India, it may not be that much because we are already exposed to multiple taxation at a rate moderate, then higher moderate than the across the national or the global average. Now with GST, this has forced for the government to bring in a provision for anti-profiteering. Now there are two different models predominantly across the globe for determining the profit impact on the transaction. One is net profit method and other one is unit rate method. These are the two models predominantly exposed or implemented in many of the nations where GST has been rolled out, or precisely at the time of rollout of GST. Now, what is this net profit method? In the net profit method, the taxpayer is asked to predetermine his profit percentage. As we are all clear that no one does business for charity, there should be an element of profit in the transactions or in the business. So prior to the rollout of GST, the taxpayers were asked to predetermine what is the profit percentage they are having it pre-GST, and after rollout of GST also the same amount of profit they have to retain. The basic idea of this is to ensure that whatever the benefit of input tax credit the taxpayer is having has been passed on to the end customer or not. So that is one model which has been adopted, and Malaysia, which has gone to GST or implemented GST from 1st of April 2015, has gone for the net profit method. Then we have another method known as unit rate method. This is again used in very few countries, and Australia is one among those countries where it has been very successfully implemented and monitored, and the citizens and the government could see the visible impact of GST there. So in the unit rate method, per unit profit is predetermined. So what is the profit per unit of product which I am selling it pre-rollout of GST, and the same amount of profit has to be retained even after rollout of GST. So in the costing, whenever there is input tax credit, that gets automatically adjusted in my selling price, because if my cost is reduced and my profit is predetermined, that will automatically ensure that my selling price is also reduced. So that way it is been implemented in Australia. And one good observation what we have from the Australian implementation is that it is being monitored by the Ministry of Consumer Affairs only, anti-profiteering, unlike in India where it is monitored by the State Department of the Taxation, that is the tax department. And in Australia it is merged with the Competition Act, and it is known as Competition and Consumer Act 2010. And if you see the Australian model, that has a huge amount of transparency. It was asked in the Australia all the manufacturers or the sellers to predominantly display what is the price pre-GST and what is the price post-GST and what is the difference. So this made things very transparent at the time of rollout of GST, and consumers never had any impact of the GST. And this is normally known as dual pricing or dual MRP. So the labels on the products used to have pre-GST MRP say $100, post-GST MRP is $98.5. So by this way the differentiation was made at the granular level or the last leg of the transaction. And another important thing is, if I ask the taxpayers, I mean the product manufacturers or the sellers, to predetermine their profit percentage or profit amount, they may not be happy, or they may say that there can be cases where prices of the inputs are fluctuating. In such cases that will become a challenge. So to even absorb that, they have given a cushion of 10% for the escalation of prices in the inputs. This is also one important observation we have from there. Another important thing is, pre-GST and post-GST, government used to conduct frequent surveys. So this also has enabled the government to gather the data and find out whether the tax benefit has been really passed on or not to the end customers. And we have discussed about the Malaysian model already, where profit percentage is predetermined compared to the pre-GST era, and the same is maintained with the post-GST era. Now, what is this anti-profiteering? These provisions are given in a CGST Act. What they read is, any reduction in the rate of tax on supply of goods or services or the benefit of input tax credit shall be passed on to the recipient by way of consumer rate reduction in prices. So, if we see these provisions, it is very clear. It says that if there is any benefit of input tax credit on account of reduction in the tax rates or on account of availability of input tax credit which was not available previously, that benefit has to be passed on directly and visible to the customer. The central government may, on recommendations of the council, by notifications constitute an authority or empower an existing authority constituted under any law for the time being in force to examine whether input tax credit availed by any registered person or reduction in the tax rate have actually resulted in commensurate reduction in the prices of the goods or services or both supplied by him. So, the Act has laid down the procedure or the process or the modality to monitor the implementation of the effects of anti-profiteering. The Act says that it can ask any of the existing authorities to monitor it or constitute a new authority exclusively for the purpose of anti-profiteering. So, based on that, GST Council will recommend it, and basis on that notifications will be issued and authority will be constituted. The authority referred to in subsection 2 shall exercise such powers and discharge such functions as may be prescribed. Here also it is said that nothing will be said in the law based on the provisions given in subsections 2, that is the previous section what we discussed. A new authority or the existing authority will be monitored. They will be given the authority to lay down the procedures and processes for monitoring the anti-profiteering impact. Now, we have seen in few minutes back that the benefits of the GST is availability of input tax credit across the supply chain and all taxes being available for input tax credit. Now, if we see here, this chart will give you basically what are all the taxes predominantly that got subsumed under GST or that got abolished on account of rollout of GST. As you all know that your central excise, your service tax, your VAT, your CST, all this got subsumed under GST under various taxes like your CGST, then your UTGST. Now, what is left over are certain cesses. Even those cesses are also abolished, because we are talking about GST being one nation, one tax. If we have multiple taxes, then it will not go along with that slogan of one nation, one tax, which is the basic intention of the government. To promote and support that, even various industry specific cesses which are there, they also have been abolished before the rollout of GST. One classic example could be for you is your education cess and secondary higher education cess, which was there on service tax as well as on central excise duties. That has been removed or abolished in case of indirect taxes. And there are individual cesses like your automobile cess or your tea cess or your coal cess or BD cess or your sugar cess, jute cess or your CVD, clean energy cess, all luxury tax, all these have been subsumed or abolished, especially the cesses which are industry specific have been abolished. That means this is paving way for ease of doing business, less compliance cost, less number of authorities to be interacted, less number of returns to be filed. This will overall increase the ease of doing business. Now, we have seen what is anti-profiteering. One is reduction in the tax rate and other one is availability of seamless input tax credit. Now, to do these things, we have a small computation here on the screen here, which will clearly explain two legs of my transaction. One is from the manufacturer to the retailer and the other leg is from retailer to the end consumer. Here I have avoided taking multiple chains in the whole supply chain cycle. Now if you see here, my raw material which is being procured pre-GST, the prices are same at both the levels, 10,000 rupees, and here I have taken central excise at 12.5% and value added tax at 14.5%. If you observe here carefully, it shows that VAT is 14.5%, but I am computing, if I compute on 10,000, it should be 1,450, but here I am having a number of 1,631.25. That is because VAT is computed even on your excise duty, that is tax cascading. Because of that, my effective rate of VAT is 16%. Now my cost of purchases here is 12,881.25. Now the same item is priced under GST at 18%. So my CGST is 900 and SGST is 900, because I am computing 10,000 of 9% on 10,000 rupees. So my cost here is 12,881 and here it is 11,800. Now assuming that the value addition is being done at 1,000 rupees. So if I have some services which I have incurred here, on that I am paying service tax of 15%, 14% basic service tax plus 0.5% Swachh Bharat cess and 0.5% Krishi Kalyan cess. So that makes me 15% of 1,000, that is 150, but in case of GST it is flat again 18%. So it is 12,980 and pre-GST era it is 14,031. Now if I have a profit, obviously as a businessman I am always interested in the profit when I do business. So add a profit element of 1,000 rupees here. So that increases my selling price or makes my selling price to 15,031 rupees and here 13,980. Now technically my cost should be less or net of my input tax credit based on the provisions in my accounting standards. So being a manufacturer, I am entitled to take VAT credit and also I am entitled to take central excise credit. Here I am not a service provider, so I am not eligible to take the input tax credit on my services of 150. So that is the reason we have a reduction of excise duty and value added tax here. Now I am reducing here GST here both for goods and services. So what we have seen in previously, the benefits of GST is cross utilization and no differentiation and availability of credit of all taxes. So here 900 I have taken of CGST, SGST on my initial purchases and 90 rupees on my value addition for services, that is also being reduced. So if I sum up these two taxes, my input tax credit is available. In pre-GST era, I am getting an input tax credit of 2,881.25. In GST era, I am getting 1,980 rupees. So my selling price before taxes, that is after adjusting my ITC, it will be 12,150 here and 12,000. On that, when I sell it, I need to pay central excise and value added tax both at 12.5 and 14.5%. That makes my selling price to retailer at 15,650.72, and in case of GST era it will be 9% on 12,000, that is 1,080. So my selling price is 14,160. So this is what is the price which the retailer is getting. Now assuming that the retailer also has done some value addition of 1,000 rupees, on that again service tax of 15% is available, then the price will be 16,800, and in case of post GST it will be 15,340. Again let us assume the constant profit element of 1,000 rupees even by the retailer also. So the selling price will be 17,800 and 16,340. And here if you observe here, we are reducing the input tax credit. When I am reducing the input tax credit, I am reducing only the value added tax here. The reason is the retailer is registered as a taxpayer or as a dealer under VAT only, because he is not into manufacturing activity. So he is not eligible to be registered as excise taxpayer. As a result, he cannot avail the benefit of excise taxes. So that has to be added to the cost of my procurement or inventory valuation based on my provisions under accounting standards. So if I reduce my value added tax only, because as a VAT dealer he cannot take service tax credit also, so even that is also not being reduced, only VAT is being reduced. So my selling price will become 15,818.75. In case of GST, there is no differentiation between a manufacturer and a retailer or a dealer, because the tax regime is same and the taxes are same across the supply chain. So the taxes which he has paid, 1080 of CGST, 1080 of SGST and 90 rupees on value addition, that is also being reduced here straight away. So the cost will be here pre-GST, pre-addition of taxes at the time of sale, the price will be 14,000 rupees. On that, if we add taxes pre-GST era, VAT will be 14.5%. The retailer was paying 18,112 rupees 47 paise. In case of GST, the retailer is passing only or paying only 16,520 rupees. The reason is the selling price itself is reduced. On that, the tax applicability is 18% in the GST era. Post GST era, the effective rate of tax is more than 27%. Here 12.5 plus 14.5, that makes to 27%, plus VAT is computed on excise duty also. So that will be effectively around 28%. That difference, reduction in rate and availability of input tax credit across the supply chain, in this side if you see here, that has resulted in reduction in the price being paid by the consumer. So this is the benefit of GST, and to ensure the industry has passed on the benefit of reduction of taxes, anti-profiteering provisions have been laid down in the GST. So here the basic assumption which I have taken here is there is no impact of other taxes and prices are same pre-GST era and post-GST era. If there is any price differentiation, the end price which the consumer will be paying also will be accordingly inflated or increased or decreased. Now, we have seen what is anti-profiteering, what are the provisions, what are the benefits of GST and how it is going to impact the common man at an overall level. That is one angle which I am telling you is from the common man. There is also the other angle for that. When I am procuring goods, that means I am also purchasing the goods. Post GST, that means my sellers also have to factor anti-profiteering, based on that reduce my price. So as an employee or as a cost accountant or as a stakeholder in the organization or a key management person, I need to ensure whether that benefit is being taken care or taken by the procurement department or the sourcing department. If not, my cost of acquisition of material will be at a higher rate, and if my competitor has renegotiated the prices and he is procuring at a lower price, what will happen? His selling price will be less compared to mine. In that case, all the sales will go to my competitor and I will be losing the market share. For the vested interest of the organization, we need to ensure even on the purchase contracts pre-GST era, whatever is there, those have been renegotiated. And coming to the provisions in the rules, we have rules number 122 to 137, which will talk about the provisions of anti-profiteering. If we see in the act, it says that as prescribed, it says. Now that has been happened through various rules, and those have been given in these rules. And also various commissioners have been notified for implementation of the anti-profiteering rules. And what are these, what are the scope of these things? Let us discuss them now. And we have seen in subsection 2 also, as authority can be constituted or an existing agency can be given the task of implementation of anti-profiteering. Here the government has gone up and set up a new machinery for monitoring this, and it is known as National Anti-Profiteering Authority. The chairman also has been constituted, and many complaints have been filed by the end consumers. They are at various stages of investigation, and 2 orders have been passed on very recently. And we have discussed, or we will be discussing those 2 cases in a separate session called case studies session. What is the impact of the National Anti-Profiteering Authority orders passed on the trade and industry? Now, the process how National Anti-Profiteering Authority works is very simple. Any customer can go and lodge a complaint as long as he feels that he is being not passed on the benefit of anti-profit or the reduction of the prices or the tax rate. Based on that, the complaint will be first sent to the state screening committee, and the state screening committee will review that. If they found any substance, it is valid case, then it will be sent to the standing committee. The standing committee is at a central level. The standing committee will review the applications forwarded by the state committees, and if they find they are substantially eligible to be investigated, then they will ask the Director General of Safeguards to investigate it. Once the investigation is done by the Director General of Safeguards, that report is submitted to the National Anti-Profiteering Authority. Based on the report given by the Director General of Safeguards, the National Anti-Profiteering Authority will take necessary action, either asking the taxpayers to refund the excess price collected, or transfer the proceeds to consumer welfare fund, or any other mechanism which it feels fit, or it can also go and punish the taxpayers. So this is the overall process of monitoring of the price differentiation pre-GST era and post-GST era. So we have seen 2 committees are there. One is a committee at the state level, and the other one is at this central level. So the screening committee, which is at the state level, is known as state level committee, and it will have 2 officers. One officer is from the commercial tax department of the state, and another officer is from the central taxes. It will be nominated by the commissioners. All state governments have notified the state level committees, and the information is available on the CBEC portal. Whenever any complaint has been received by the state level committee, it has to be cleared within a time span of 2 months. It will validate, yes, this is a genuine complaint or not. If it is a genuine complaint, it will be forwarded to the standing committee. If not, it will be sent back to the customer or the person who has filed the complaint, stating that this is not valid or a genuine complaint. The standing committee will review all the applications sent by the state level committees, and that also has to be completed within a period of 2 months. If they find that the complaint is genuine at the standing committee level also, it will be forwarded to the Director General of Safeguards for further investigation. We have seen this anti-profiteering authority has been set up, National Anti-Profiteering Authority has been set up. Who are all the members of this National Anti-Profiteering Authority? The National Anti-Profiteering Authority will be headed by a chairman and 4 technical members. If you see here, unlike in the advanced ruling where it is an even number, here it is an odd number. So we have 5 members. If there is any difference of opinion, the majority members' opinion will be considered for passage of the ruling or the order by the National Anti-Profiteering Authority. The chairman can be a secretary to the Government of India, or he must have held the position of secretary to the Government of India, and the tenure of the chairman is 2 years, or he can be appointed any number of times till he gets an age of 65 years. Once he crosses the age of 65 years, he ceases to be the chairman of the National Anti-Profiteering Authority. Then we have the committee members, the 4 committee members, and these 4 committee members are ideally or practically be the principal commissioners or the chief commissioners of the central tax or the state tax, or who must have held a similar position or a similar capacity in other departments. These technical members will be 4 in number, and their tenure is also 2 years, and they can be reappointed till the time they attain age of 65 years. Once they attain the age of 65 years, then they are not eligible to be constituted or be part of the National Anti-Profiteering Authority. Now, Director General of Safeguards. Whatever information that has been received by the Director General of Safeguards from the Standing Committee, that will be reviewed thoroughly. They will be investigating the case, refer to it and complete the same within a period of 3 months from the receipt of complaint. So if we see here, the state level committee, it is 2 months, then standing committee within 2 months. Then when it comes to the Director General of Safeguards, it is again stipulated for a period of 3 months. And if the Director General of Safeguards feels that investigations cannot be completed within a period of 3 years, they can go and ask for extension for a period of another 3 months. And the Director General of Safeguards, during the period of investigation, it will give an opportunity for both the persons, that is the person who has filed the application and the respondent, that is the person on whom the complaint has been filed. Both will be given an opportunity and they will be asked to present their case with all the details and documentation as required by the Director General of Safeguards to ensure fair investigation. And apart from these 2 related parties, the applicant and the respondent, the Director General of Safeguards can ask information from any other third party if it feels it is required in the course of investigation. Who is this third party? Are they from the industry side? Are they experts? They can appoint even experts from the industry to determine the requirements based on the nature of the complaint being raised. Now, what are the powers of National Anti-Profiteering Authority? It can recommend for reduction of prices, or ask the registered taxpayer to return the excess amount charged, or can impose penalty, or can cancel the registration of the taxpayer. If not possible to pass on the benefit, it can ask the funds to be transferred to the Consumer Welfare Fund. Investigations have been completed by the Director General of Safeguards. Now it has been confirmed that the respondent has not passed on the benefit of input tax credit or reduction in the price. Reduction in the price, let us take a small example. If my price is MRP based product, MRP includes all taxes. pre-GST era, let's take in the same example what we discussed, excess duty 12.5 and VAT 14.5 together makes to constitutes to roughly 28%. Now that is part of my 100 rupees price. Now that has been reduced to 18% under GST. That means the MRP which is fixed at 100 rupees has to be reduced to lesser price than 100 rupees, because 10% is the tax reduction that is happening, that has to be passed on. So my MRP can come down anything between 99 rupees or 98 rupees or 95 rupees, because when we take an example of this 10%, it may not be on all the inputs, it may be on a single input or majority of the input. So it can differ anything, or it will ultimately end in a price lesser than 100 rupees. So that amount has to be passed on to the end customer. If that is not passed on, it can ask the respondent to disperse that amount to all the taxpayers. Practically sometimes it is not possible. Say for example of a FMCG company, say they are into the business of selling shampoos and soaps. Is it really possible for them to track who all the customers or consumers who purchase the shampoo sachets and identify them and pay an amount of 25 paise or 35 paise or 1 rupee, whatever is that amount? That is next to impossible. So in order to ensure such conditions are met, the differential amount will be transferred to the Consumer Welfare Fund, which is constituted and notified under the GST Act. This Consumer Welfare Fund will be used to educate the consumers or the persons who are purchasing the goods and services on the benefits and the implications of GST. Then once it is determined price benefit has been not passed on, then the National Anti-Profiteering Authority can go and ask the respondent to pay penalty, or it can go and ask the taxpayer's license to be cancelled also. And if the taxpayer has collected excess amount, the respondent or the taxpayer has to pay an interest of 18% from the date on which he has collected the money to the date on which he is depositing the money with the Consumer Welfare Fund or paying to the end consumer wherever it is practically possible and feasible. Now, how the proceedings will happen? By the Director General of Safeguards, where the standing committee is satisfied that there is a prima facie evidence to show that supplier has not passed on the benefit of the reduction in the price in the rate of the tax on the supply of goods or services, or the benefit of input tax credit to the recipient by way of consumer rate reduction in the prices, it shall refer to the Director General of Safeguards. We have discussed this. From the state level committee, it will go to the standing committee. From standing committee, it will go to the Director General of Safeguards. The Director General of Safeguards shall conduct, investigate and collect evidence necessary to determine whether the benefit of reduction in the rate of tax or on any supply of goods or services, or the benefit of input tax rate has been passed on to the recipient by way of consumer rate reduction in the prices. We have discussed this case also. Investigations will be done and it will ensure or it will verify that price reduction has been taken place or not. So these things you can read out. We have already discussed most of the process what has been described here. Now, how to file a complaint? Now everybody is aware or they feel or they have an opinion that the price benefit has been not passed on to them. What is the mechanism? Initially there was a process where the taxpayer or the consumer who felt that this price reduction is not happening has to go get a physical form and file it. Now it is made online and very simple process. For this National Anti-Profiteering Authority, which has been established by the notification, a separate authority has been established, and at the same time a separate website is also provided. The website name is naa.gov.in. Anybody can log into this portal and file the complaint. So here, if you see here, it has various menus. It talks about what is NAA, what are the registrations, what are the orders it has passed till date, what the consumers can do, what are the GST rates, and the contact coordinates for the National Anti-Profiteering Authority. So in the consumers menu, if we click it here, it will take you, if you are a first time person coming here, you need to register here, or if you have already registered, you need to give your credentials, and based on the CAPTCHA code you can log in. Now once you log in, you need to fill this basic information, who you are basically, because when any complaint is being received, it wants to be known by the department or the authority who is receiving or who is filing this complaint. So that information will be provided here. So the complaint name, the person who is filing the complaint, his name, address, his contact coordinates, and then the proof of address, maybe his PAN card or Aadhaar card or driving license or passport, that has to be uploaded here. And they also specified the file size should not be more than 3 MB and the file format also. Then once that information is over, in the next section, the complaint or the person who is filing the complaint has to enter the name of the person to whom the complaint is being logged. So his name, his address, and his contact number. Suppose if I want to file a complaint against the shop called ABC, I need to enter the shop name, the address, their phone number I need to enter here. Then what are the purchases I made where I felt this product has to be passed for anti-profiteering provisions but has not passed on the benefits, that will be entered here. The item which I purchased it, what is the market price prior to the GST rollout, what is the current price, what is the earlier MRP, and what is the current MRP. You may have a question, what is meant by two prices here? Certain people or certain industry or certain retailers, they sell it less than the MRP based on the volume. So what is the actual MRP price and what price actually it is being sold? So that information has to be entered here. If it is sold less than MRP, pre-GST and post-GST also, what is that price? Or if it is sold at MRP, what is the MRP, pre-GST and post-GST? Then in the next section, the user has to enter the information whether the benefit of reduction in tax rate has been passed on, and for this they can enclose the copies of invoices or price list. So it is a simple radium button where the user can check yes or no here, select the button here. Then whether the benefit of ITC has been passed on. So the first provision says that tax rate, the second provision says that benefit of ITC. So that has to be checked here, and then any other information which the consumer feels he can share with the anti-profiteering authority so that they can start the investigations, he can upload that information or give that information. Then the user has to enter the CAPTCHA code shown here and the place and then submit the application. This website also has the tracking mechanism. What are the complaints logged and what is the status of the complaints logged also can be tracked on this portal. Now, when the Director General of Safeguards does investigation, it can ask for this information. This is based on some of the orders issued by the Director General of Safeguards. So first thing it will ask is copy of the balance sheet and trial balance for the corresponding periods and the previous financial year. So it wants to investigate and find out really the tax rate benefit or the input tax rate benefit can be derived or not. So for that reason it is asking the trial balance as well as the balance sheet. Then it can ask for the copies of the GST returns filed along with the copies of the Tran 1. You are all aware in the transitional credit to be availed, Tran 1 provision is there. So has the Tran 1 credit has been taken by the client or the person who is filing on to whom the complaint has been issued, his Tran 1 copy has to be submitted along with the GST returns, and soft copies of the outward supplies of invoices made. So if any sales has been made, so normally sales will happen, those sales soft copies has to be given to the authority along with 2 sample copies of the invoices issued to the customers. Then it also has to it can also ask for the inward supply invoices, the purchase price, what the person has been purchasing, the respondent has been purchasing, because the invoices which are purchased prior to GST and post GST, that will talk about the variation in the price and it will talk about the variation in the tax rates. And it can also ask for the price list. Normally every taxpayer or every entity maintains a price list, maybe based on the region, based on the model of the product, or based on the geographic location, or based on the customer classification, they maintain the price list. So it will ask for the price list pre-GST era and post-GST era. They will do the comparison between these two prices, the invoices, purchase invoices, the outward supply invoices, the analysis done on the trial balance and the balance sheet information placed. Based on that, they will derive whether input tax credit has been genuinely passed or not. Till date, about 200 notices have been issued. Of that, 2 orders also have been passed, and in both the cases it is in favor of the respondent. In case number 1, it was about a manufacturer of a, sorry, it is not a manufacturer, it is an automobile dealer, where the applicant has filed that the prices of the car has been not reduced after the rollout of GST. Proper investigation has been done and it has been found that the tax rate percentage quoted by the applicant is wrong, and they have verified, they have done the computation of the workings, pre-GST price and post-GST price along with the tax rate, and they found that the taxpayer or the respondent has passed on the benefit, even though it is negligible amount that has been passed on. So the order has been issued in favor of the respondent only. There is also a second order passed by the National Anti-Profiteering Authority, that is also again in favor of the respondent. Here we don't mean to say that it is always favoring the industry. It has gone into the depth of the analysis and the impact of the number game and then only passed on the order. In the second case, it was relating to the India Gate Basmati rice. Previously, rice was not taxed under GST, or sorry, not taxed under VAT. Now under GST, Basmati rice is being taxed, being a branded product, at rate of 5%. So the applicant has raised the query or logged a complaint stating that since it is taxable under GST, so there will be input also, that benefit is not being passed on. On the contrary, the prices have increased. The Director General of Safeguards have done a beautiful investigation, and it has found out that the amount of input tax credit where the person, the respondent, is getting is lesser than the tax being levied on the finished product. As a result, there is no amount left over, or it cannot be passed on. So these are the 2 orders which have been passed as on date. Again, if you remember reading in the newspapers recently, Hindustan Unilever has voluntarily come out and said that while doing the filings of the Q4 of the last financial year, last calendar year, they have come out and said that they were not able to pass on the benefit of the tax rate reduction. As a result, they wanted to pay certain amount of money as penalty to the Government of India. Now they are working out on the modality on how to pay that. The Consumer Welfare Fund has been notified, but the payment process is not yet notified. So they are waiting for that. And how that amount of 100 crores or whatever has been arrived, nobody is aware what is the basis for that. Even for the National Anti-Profiteering Authority to accept the fund which is being voluntarily paid has to be deliberated in detail, because there is no order being issued that is being come out as voluntary basis. That shows the good corporate governance standards what we are having in India compared to the other nations. Keeping the plus point there, can a person pay voluntarily? If yes, what is the mechanism? That has been not spelled out. We need to wait and watch how that process is going to happen. And here are few action points which I normally discuss everywhere. So again, most of the points we must have discussed during the discussion. The first and the foremost thing is, now it is almost 10 months plus after the rollout of GST. Things are very clear, and during this period also for some of the items tax rates have been reduced. So it is always advisable to go and renegotiate the prices. If you have renegotiated before the price reduction, it is advisable to go and renegotiate it again after the reduction of the tax rates. Or if you have not renegotiated at the time of rollout, then it becomes more mandatory for you to go and renegotiate the prices. And also derive or make a simple statement for the products. Take your trial balance. See what were all the taxes which you are not eligible to take input tax credit prior to the rollout of GST. And against the same heads, identify whether you are eligible to take it under GST. If you are eligible to take it, make another statement, comparative statement. Previously ITC available and ITC available. That will come up with a total. That benefit, see, that has been factored in your revised pricing after the rollout of GST. The moment you do such a statement, you can voluntarily go and take a certification or from any of the practicing cost accountants and give it to the authority as and when they ask, or that will give you as a scope or a point of confidence to ensure and see that you are complying to the law of the land. Keeping that aside, it is one of the best avenues or opportunities for the cost accountants in the practice fraternity. Who can prepare cost statement correctly or perfectly? Only a cost accountant can do that. So apart from your cost audits, you can also go and do certifications for the price reduction or tax rate reduction or availability of input tax credit. Many of the cost accountants started doing it, and some more also are requested to go proactively and get these contracts or projects engaged and do the certification. This will ensure, one is you are having knowledge of the cost. As a cost accountant, you have the thorough knowledge of the costing. Second thing is you get more revenue, and third point is you are employing or you are enabling the client to comply to the law of the land. And another major challenge what I feel here is, being MRP based products, most of the products, the price reduction is happening, but it is become practically impossible to track wherever the old MRP stock is lying at various stock points. When I say stock points, it can be the warehouses, my warehouses, or it can be at my stockists, or it can be at my distributors, or it can be at the retailers, or it can be at with the C&F agents. How much stock is lying? How many units are lying with the old MRP? How do I keep track of it? That will become really a Herculean challenge. That is what we have seen in the case of Hindustan Unilever. Say for example, the shampoo rates have been reduced from 28 to say 12%. Now, how many liters of shampoo is being produced? Hindustan Unilever will have the information. How many SKUs of 100 ml, how many SKUs of 5 ml, how many SKUs of 250 ml is there? That information also they have. But they don't have information at SKU level at each stock point. So that will become really a challenge for them to reprint the MRPs and send it across the supply chain cycle. So these are certain practical challenges or issues which we are facing it. And If you have sufficient budgets and if the company is IT savvy, today you have lot of softwares which can track at each stock point what is the SKU, what is the manufacturing date, and what is the MRP label it is having. In case if you are having such a robust IT infrastructure, that is very simple. If not, we need to ensure some mechanism to track such things and replace the old MRP stickers with the new MRP stickers. Else unnecessarily we will be pulled up into the legal compliances, and we need to go to the department and we need to prove or we need to explain our case for them. And apart from that, it will also throw a negative image in the market stating that so and so company has not passed on the benefit of tax rate or the input tax credit. So this is what I would like to share on the anti-profiteering in the discussions. Now we are very clear what is anti-profiteering, what are the various provisions we have, and what are the implications we have, what is the function of the National Anti-Profiteering Authority, the Director General of Safeguards, how to file the complaint, and how do we ensure we meet the compliance requirements also. Thank you.